Excellent. Okay, good morning everyone and welcome to FX Street webinar. This is Brandon Wendell from Online Trading Academy with you today, and I'll be going through my ways that I actually trade the news. I do like to trade the news in the currency markets and as well as the futures markets, generally because it gives me a quick opportunity to profit. Now, you do have to realize that when you are trading for these quick profits, there's also a lot of risk involved with some of these trades. You can get stopped out very, very quickly because we don't know exactly what the news is going to be, right? It's an unknown what we're trading. We know when the news is coming out. We may even know how the news might affect us depending on how it has before, and that's how we can start to increase our probabilities for success, but we honestly don't know what it's going to be until it is actually released. So, how do we deal with this? Well, for the one thing, I kind of revert back to something that was told to me by one of my fellow instructors, Eric Ochotnicki. He's an excellent trader and instructor. He lives down in Austin, Texas. And he told me once, Brandon, the news is just an excuse for what was already going to happen anyway on the charts. And that's the way I look at it. I look to see, okay, well, we've got our supply and demand zones, and I've talked about those in the past, and so has Sam Seiden, if you've viewed some of his webinars. And we pretty much trade based on those levels. And we look to see what is the overall trend of the currency that we're, the pair that we're trading, and where are the most likely turning points based on the supply and demand. That gives us the opportunity to get in or to get out. So when we have this news, generally we're going to be breaking out of a basing area because often when the news comes out, just before the news I should say, we get the basing because people don't know exactly what the news is going to be or how people are going to react to it. So they start to flatten out in price. You start to see very little trades going on and very low volatility. But once that news does come out, you usually get an eruption of some sort of motion, either bullish or bearish, depending on what that news was and what was expected. Now, as far as where to find the news, I've used several different sources. I believe FX Street has a source. Don't want to show others, but let's see. We'll go to, where's my, there we go. FX Street. And there should be news on here. I believe this is just Forex news, just overall things that are popping up. But what I'm looking for is an actual release or calendar of the news. And unfortunately, I'm not familiar with this area of the site of where it might be. If I go back to the home page, I think if I scroll down a little bit on the home page, it should be there. There we go. Right there it is. Okay. So we've got the economic calendar just a little bit below on the home page. I knew it was there somewhere. I just hadn't looked at it for a little while here. Anyway, what you notice is that we're going to pay attention mostly to the strong announcements. That right here you see the 3 exclamation points. So those are going to be the ones that are going to have the greatest impact on the markets. And if I go in and click on economic calendar, it should give me a more detailed calendar for different dates, and I can also change my time zone. So we can look right here at the recent news that's coming out Monday, July 1st. In the United States, for instance, we had ISM numbers coming out early this morning. We actually had 2 releases of them. One was a private number right here, the market manufacturing, and that one came out better than expected. And then, of course, the actual ISM manufacturing number came out, but neither one of those was supposed to be hugely impactful. The other thing is we had consumer price numbers coming out from the Eurozone, and they pretty much came in line with expectations, so no real shock there either. But I generally want to pay attention to the ones that are with the 3 red exclamation points. Those are the high volatility expected and high impact generally. And I believe if you click on these, it just gives you some information. It gives you the previous, and it looks as though we can also have the historic or history. You can see kind of charting when the different releases were or whatever it was. We also have, well, nothing's being shown there as far as the market impact. Up there it goes. Just took it a little while. So if we go into some of the news items that were just released, ISM manufacturing right here. Remember, this is an orange, 2 exclamation, so it's moderate volatility expected, nothing huge, earth-shattering. But when we go into that, we can take a look at the previous reports and see what's been going on with manufacturing. It has been slowing down just slightly. In this case, for this particular number, 50 or above is seen as a positive, or 50 or below, below 50 is bearish for the manufacturing industry. And of course, we can click on market impact, And you could see it looks as though we had a little bit of movement towards the Swiss franc when that news came out. So it's not really showing a whole lot of activity, but then again, it's not something that we would expect a major impact. So speaking of the major impact and how to trade those, one of the ones that I look for is actually coming out this week. So when I take a look at this week's calendar, I'll scroll down to Friday. Just remember, this week, Thursday, is a holiday in the United States, so we're likely to have very light trading on Wednesday and Thursday, because it's a half day of trading in the United States on Wednesday, and the markets are closed on Thursday for the 4th of July for Independence Day. So on Friday, however, we reopen, and we open up with a pretty big bang because we are going to be having the non-farm payroll, and that is the biggest release in the United States. Canada is also releasing their unemployment rate at the same time. So what we want to see is what is going to be the reaction, and how can we possibly trade this? And that goes for any news release. We have other news releases throughout the week. Some of them are very large impact. As you can see, we have on Wednesday, I believe, Great British Pound, not GDP, but the Great British Pound. They were releasing some information. Some credit conditions, maybe it was Thursday, actually on the holiday. Yep, there it is. So we've got the Bank of England interest rate decision. We're not expected to see any kind of rate change there, but depending on the statement that is given, it could also really impact the markets. If there's a sign of a expansion in the economy where they may decide to slow down some of the easing. And the same thing going on when Draghi speaks a little bit later that day. There's a press conference and a ECB monetary policy statement going on. So we definitely want to keep in mind when that news comes out how we might be trading. Now, if you are looking at longer term trades such as swing trades, or even investing in currencies, which I tend to do quite a bit. I look at longer-term moves in those markets. This news really you don't worry about the announcement itself, but you worry about the sentiment. How is it going to impact the market over a long period of time? And if you are an intraday trader like myself, I do both. I'm going to look to see how can I make a quick profit of anywhere from 30 to 150 pips in a matter of seconds to minutes. Now, the way I do this, I take a look to see the currency, but I also want to know relationships between some of these currencies. And one of the websites I go to is this one. This is MRCI, which is More Research Center. The first thing you'll notice about this, and I'll put it into the chat there as a link, the first thing you'll notice is that these are futures contracts. These are not currency contracts. But, obviously, the currencies and the futures are going to work very similar to each other. You'll have almost the same price movement. But what I can do, and I'll enlarge this a little bit so we can see it better. There we go. I can look at it as short as a 30-day correlation, which I have it set on right now, or I can go as long as 180 days or somewhere in between. And what I look for is a currency that is going to move with a particular index or a particular commodity if there's news on it. So, for instance, non-farm payroll, I'm going to look for something that's likely to move either against the U.S. dollar, which we know the euro is going to move against the U.S. dollar, but we can also look to see something that's going to be correlated with the S&P 500, the broad equity markets. So I look at the S&P 500 and work my way down. We see that right now the Canadian dollar has a 57% positive correlation, not very high. We also see, though, the Australian dollar, ADU, okay, that's AD for the Australian dollar. If you're not sure what these futures are, they are hyperlinked. You can click on them, and it should bring up a pop-up that shows you the chart of whatever it is. So right there, September 13, Australian dollar. So that's how you know what they are. But AD lines up with SPU. Now, it's not a huge positive correlation, although 84% is pretty high. Okay, zero or close to zero, such as what we see here. There's NASDAQ and crude oil. They only have a 1% positive correlation. That means that they're almost not correlated whatsoever, that they won't typically move together, at least for the last 30 days. Doesn't mean it will continue to be that way, but it's a high probability. So going back to my Australian dollar there, we can see very high positive correlation. Well, I can also then look for a currency that has a high negative correlation with the S&P. Sorry, it was right there, the S&P, 84%. And when we look, we see the Swiss franc at negative 56. We also have Japanese yen at negative 50. So it's interesting because when you go back out, if I'm going to look to trade non-farm payroll, one of the things I could do, let me just copy this chart. There we go, copy window. Actually, I didn't need to do that. I'll just put them next to each other. Go out to a daily chart. And I'm going to disable some of these indicators that I have here because I don't need them right now. There we are. But this is I'll put in the S&P futures on a continuous contract. And then just below that, I will insert AUD-JPY. Oops, got to do this as local time. Oh, I'm going to have to cancel this first. Hang on a second. So we'll do local time first. The program's a little particular as to the time frames you can use and what you can compare. So there we go. Back to local. Insert symbol. AUD-JPY. And that's only going back 2 years. Let's go back on a weekly chart. And what do you notice about those two charts? What do you think? What do we notice about those two charts? They look pretty similar to each other? Almost identical, yeah, absolutely. They move very close to each other. So there's a lot of correlations between certain securities and currencies. For instance, if we were to take a look at, right here, we'll go to at JY. Now I'm using the futures in this case on the Japanese yen. And I have different delays. What's going on there? Let's go to format symbol. Oh, that's why I know. Okay, we'll go to USD JPY on the top chart. That'll work. I forgot what account I was logged into. And what I can look on the bottom, let's see, it's not going to give me the futures, is it? Yeah, it's not enabled for that one. Okay. Let's do format window, format symbol. And see if I can substitute. There we go. Let's see if that works. What you're going to notice about these two charts, this is the US dollar, Japanese yen, and TLT, which is the ETF that tracks treasuries, they move in opposite directions. Not perfect, and honestly, if I could have shown you the futures, the 10-year treasury note, the prices move opposite of the Japanese yen. The Japanese yen tends to move with interest rates. So you can even see, just in the very end here, the peak and moving down. Okay, so there are a lot of correlations that are out there. So if I wanted to trade the non-farm payroll, one of the things I could do is trade the Aussie yen. And that non-farm payroll is coming up this week. So how do I actually trade this non-farm payroll? That's probably what you're wondering right now. Like, shut up and get to the business, right? Well, let me go back to a 1-minute chart here. And what I'm going to do is actually take us back to the last non-farm payroll release, which was June 7th of this year. So I'll go back to, let's see, first 8/06. We'll do 07 2013. There we go. And if I scroll back long, well, maybe. It all depends on the news release, right? I don't really care what the news is. All I care about is the reaction. So there's the end of the 6th. We go to June 7th. Still the 6th. And once again, let me just make sure I'm on the right time frame here. Format symbol, we'll put that on the exchange time. So that way, when the news came out, just moved it right back, it would have been at 8:30 in the morning on the 7th. Okay? 7, there we are. Non-farm payroll Friday. So just need to go back a little bit to where that news was released. And you can tell because there's usually going to be a pretty large spike when that happens. Now I'm on a very short time frame right now, aren't I? I'm on a 1-minute chart. Generally, I'd look for this opportunity on either a 1 or a 5-minute chart. And all I'm going to do is look to see, is there basing before the news announcement? And if there's basing before the news announcement, generally I'm going to look to put a bracket order around that basing. I'm going to target my next level of supply or demand. So in the case of the Aussie yen, we already see the reaction, what happened. But what I would do is I'd look to see just before 8:30 We got there 829, there's 830. So pull this back a little bit more. Unfortunately, I didn't have really good basing, although this is on a 1 minute chart and this is only about 15 pips. My area that I could highlight as my basing would be, in this case, these highs. You see we just came off of a couple of supply zones right there on the 1 minute. And the bottom of the basing just before the news. I usually look for about 10 to 15 minutes before the news gets released. So that's pretty much my zone right there. Unfortunately, because it wasn't extremely flat, I would really want to see it basing something like this before the news, where you're stuck in maybe a 15 pip range. Because when you have something tight like that, you get better reward to risk ratio. But you take what you can get as a trader. So in this case, what I would do is just simply do a bracket order around this. Okay, my target would be my next level supply or my next level demand. Now, a bracket order, I'll go ahead and bring in my order bar. On this particular platform, most platforms allow you to do this. So if you're trading on MT4, whatever platform you're trading on, you usually can do this. A bracket order is simply an order that allows you to put in your entry, target, and stop all at the same time. And in this case, I choose, it's called an OCO or OSO. OCO is one cancels other or one sends other. So in this case, I can go for a breakout with a buy stop, sell stop with exit bracket, one limit, one stop. So what that's going to allow me to do, and as soon as I click on it, you'll see I have a lot of orders that I need to put in now. I can put in a buy order either on a stop market to catch the breakout or a stop limit, and I could use the stop limit to prevent myself from getting a lot of slippage. A lot of these moves can be pretty fast, and if you don't get filled at a certain price, you don't want a lot of slippage. You don't want to get filled at a price just before the target, so your reward to risk ratio is very, very bad. Okay? So you may want to change that to a stop limit. Once you have that in, that would be my long entry. There's my long target. There's my stop market to protect me from great losses. I also have the sell order that can go in at the same time. Now, only one of those would get triggered, not both. Okay, it's one cancels other. So if this long gets triggered, the short gets canceled. If the short gets triggered, the long gets canceled. And you can see I could put in my target and my stop at the same time. But before I do that, I need to start at my current price and look back and up to look for the origin of a significant drop in price. That would be my supply zone. Well, we went through a little bit of basing right here and dropped down, so I'd probably highlight this area. Could I go a little higher to this? Perhaps, but that was actually a test of a supply zone as well. I want to go ahead and look for the very first one we come to, and that was significant selling pressure. Even though we're only on a 1 minute chart, very short time frame, it could still cause prices to stop and reverse. And I'm really just looking to trade kind of a knee-jerk reaction out of this basing. So I do the same thing for my downward side. I look to see where's the origin of a significant move up, and unfortunately on the downside I don't get a very good reward to risk ratio here whatsoever. It's only about a 1 to 1. Even on the long it's only about a 1.5 to 1. Okay, so what I would do then, make sure I've got, let's see here, format strategies, no strategies on. So we will put in, where is it, my trend line labels. There they are. Oh, actually, they're not going to show up on this right now because they're way off to the right. But what I'll do now is do format trend line labels. There we go. Now we can see the numbers. Okay? What's the benefit of trading AJ versus AU? Well, we can take a look. Generally, the Australian dollar and the Japanese yen have a really high positive correlation with the S&P 500. The dollar doesn't always have a negative correlation with the broad market. That's the reason why. This one will almost always follow the S&P, whereas the U.S. dollar, when the markets become very, or I should say the economy becomes very bullish, then the U.S. dollar actually gains strength with the S&P. Well, I could definitely trade the S&P futures. We're talking about Forex, though. So if I wanted to trade this news using currency markets, this is how I would do it. Not everybody has the futures market available to them. They haven't subscribed to that or decided not to trade futures for whatever reason. So I'm just showing you an alternative, that's all. So when we go in, and honestly, when I trade this, I do trade it under futures. I don't trade it under the currency markets. But what I would do is put in this order, and I'll put it in as perhaps a stop limit so I don't catch a lot or chase a lot. I'm going to buy if we break above 91.20, so maybe put it in, we're looking at a bid chart, so I'd have to put it in a little bit higher, so maybe 91.24, and I don't want to chase very high, so maybe 91.28 would be the highest I would chase. My target is going to be getting out at that 91.54 supply zone, and my stop, where I'm going to get out, would be below 90, maybe 96, a few pips below that basing area. Now my stop market, my entry for the short is pretty much going to mirror the long. My entry would be where we're breaking down, 90, we'll say 96. Okay, and my stop market would be the opportunity to get out for a small loss above maybe 26. Oops, I forgot to put in the limit order, 90, and we'll say 92. And then my limit order would be my exit, which would be 90.72. So when I put in that order, what you would see is I would have my entry for the long, stop for the long, target for the long. Entry for the short, stop for the short, target for the short. Would I call this scalping? Probably. We're not looking for a huge move. In this case, we're only looking for about 34 pips on the upside, maybe a little less than that, about 30 pips to the upside. And on the downside, we're only looking for about 20-something pips, about 25 pips at the most. But that's how I would put in that trade. And then, of course, I just sit back and wait, and when the news gets released, there we go. Now, how long did it take me to make 30 pips? Let me just go ahead and scroll forward here to where that news actually came out. There is the entry, pulled back a little bit, and went right to the area of supply. Okay. Would I call this gambling? No, I don't call this gambling because I have stops in place. I don't lose 100%. Gambling is when you put down a bet and you lose 100%. You've had the possibility of losing 100%. Here, I'm trading based on a breakout, and I'm getting out at areas of supply and demand, so I still have my odds in my favor. If you go to a casino and you play a table game, blackjack is the best odds against the house, but that's only going to give you about a 49% chance of winning. Here, I probably have about a 75% chance of winning. And you can see it moves very, very quickly when the news comes out, so I was able to capture that move of 30 pips within about a minute and a half. That's all. Now, once that order got triggered for the long, the sell order would have been canceled, although my stops would have still been in place. There I hit my target. Okay? And because there's news almost every day, there are plenty of opportunities for this to happen. Now we could take a look to see AUD, USD. And once again, I could put this back to the same time frame. Go back, format symbol. And put it on exchange time. That's fine. First date. Okay, we got there. Go back to see if it would have been a better opportunity on the Aussie dollar rather than the Aussie yen. But like I said, the dollar and the S&P 500 don't always move in opposite directions. Okay? And you can see, actually, if you try to do this on the Aussie dollar, you would have been shaken up pretty badly. Because the initial basing before the news came out, right, there's the news release, we broke to the upside out of that basing, didn't move very far, and slammed back down before running back up and back down. So with the Aussie yen, I had a little bit more stability in the trade and actually made a profit, whereas here on the Aussie dollar, I would have lost. I would have had a small gain on the long that immediately would have stopped me out and turned into a loss. So that being said, I definitely want to trade with the overall higher probability, and that seems to be, well, we have just more volatility on the US dollar for the news. So I'm trading something that's related to the S&P. Now the S&P futures are trading, but the S&P equity index is not yet. So there's going to be less volatility. That also reduces a little bit of my risk. The other neat thing that you see here is pretty typical of currency moves or any kind of announcement moves. When we had the news announcement, what was the biggest thrust, the knee-jerk reaction? We had a small move to the upside, but then a big knee-jerk reaction down, right? We can actually take this out to a larger time frame if we wanted to. So those of you who don't want to trade the news excuse me, on the reaction itself, there's a second opportunity that is a little bit slower, and therefore safer. It will also not possibly give you as much profit, but still can be very profitable. So any news announcement that comes out, generally you're going to get a three-pronged move. Well, we don't really see it here. This is just showing, again, the 5-minute that move back and forth. But on that 1-minute chart, we go back to that news announcement. When there's a news announcement that's positive, usually break out to the upside very strongly. Where's the news announcement? 8:30. Oh, I'm on the wrong day, aren't I? Oh, that's 6:28. Yeah, I'm definitely on the wrong day. Sorry. Oh, it didn't go back far enough. That's why. There we are. But yeah, it's less risk with the S&P correlation, absolutely, than just trading the dollar itself. There we go, 6.7, 345. So generally what will happen is whenever you get a news release, it doesn't matter if it's from Draghi or from Ben Bernanke or just a data release, an economic data release, you usually get a three-pronged move. For good news, you get a move to the upside, a very sharp move. Okay, and that's what I'm trading here, is that sharp move. Afterwards, you get a correction. Now, recently, in the past year, I've noticed that most of the corrections either go back to the origin of the move or exceed the origin of the move. I'm not sure if they're just trying to take people out of stops or what the deal is, but for the past year, this is what I've noticed. You get this move from A to B, then you get a correction back down, but that correction, which usually takes at least twice as long time-wise as the knee-jerk reaction, will extend beyond the origin of that knee-jerk reaction. However, eventually, the trend resumes, and that may be your next opportunity to trade. So for those of you who think that this is a little bit of gambling or scalping, you get a second chance at that trend, generally, after a correction. And we see that here, the knee-jerk reaction down, correction up, 1, 2, 3, 4 candles, and then continuation of the move down. And that was obviously a much better move from 95.60 down to 94.40 for those of you who wanted to trade on a bigger time frame and collect more pips. Well, it wasn't really that big of a time frame, still on a 1-minute chart. But I would look to enter after that knee-jerk reaction reverses and corrects either by using a Fibonacci retracement. We can see the knee-jerk reaction down. And what I'm going to do is format this to give me my extensions beyond. Oh, there's one. And then 130. Oh, I can't remember the number now. I should have had these set as my default. I just don't. There's a 161.8. Oh, 138. Thank you. That's what it was. Yeah, 138.2, I guess it would be. There we go. And we're close to that, and then the 161.8 would be the next retracement. So when we pull back to one of these retracement areas, that's where I would look to see if there's weakness and possibly continuation of the trend. That's where I would go ahead and jump in, and as long as it also lined up with an area of prior demand or prior supply. So if we had good news, we would get the same thing to the upside as we see to the downside here. Going back in time, I was just trying to see if there was an area of supply that we actually ran into. Let's see, we were at 95.60. And taking a look at that, right around 95.60, we had this rally-based drop, the start of the overall move downward. And if we saw that area lining up with our Fibonacci's, at the end of that correction, that's your opportunity to jump in. So you don't necessarily have to get in on the knee-jerk reaction. You still get a second chance, generally, to get in after the correction. Oh, we actually exceeded that area, too. So we're a little bit higher, too. Might have been stopped out on that one. So knowing some of these correlations can really help you out in figuring out how to trade some of the news. Another one that I do every week, okay, there are 2 trades that I do every single week. One I can only do in futures because there isn't really a high correlation in the currency markets. That's natural gas. Natural gas gets released on Thursday for the data. The crude oil inventories, however, do get released on Wednesdays, and we do have a high correlation for crude oil. Which currency pair we will be looking at for crude oil releases? What do you think? Now they're showing natural gas there, and they're showing crude oil. Okay, this has changed from June 28th, but I don't know if they're going to be released on that day because that is, I'm sorry, that is Wednesday, isn't it? 26th. Yeah, that is not the holiday. That's the 3rd. Okay, so they're going to be released on Wednesday. So yeah, we'd be looking at the loonie. So looking at the dollar loonie, I basically use the same strategy. On Wednesdays, when I have that news release, I watch to see when it's being released. It's usually released at 10:30 in the morning. That's Eastern time. And you can see, where do they have it listed? Right there, 7:30. I'm on Pacific time for my time zone, so that's why I went there. Now it shows it's a very light impact on the markets. However, when you're dealing with the U.S. dollar, which trades opposite of crude oil, and the Canadian loonie, which trades with crude oil, we can confirm that right here. Let's see, where's CL? There it is, CL, that's crude oil. So I can look across to U.S. dollar. I'm trying to see where it is. There it is. U.S. dollar right now, negative 50% correlation, and the Canadian dollar actually has a 40% positive correlation. Although we actually also see the yen is positively correlated right now as well. But generally I'm going to be looking at dollar loonie for this particular movement. You can even see there's a high correlation with the pound. But if you were to go out to the long-term correlations, you're not going to see that. Once again, going to CL, the long-term correlations, generally the Canadian dollar is positively correlated, showing negative right there, and no correlation with the dollar. But generally they're going to be positively related. So, going back to last Wednesday, which would have been the 26th, make sure I have enough data on my charts here. Yeah, I got plenty there. 27th, 26th, there we go. And make sure I'm on the right time zone. It's on exchange time. Great. I don't know if there was an opportunity last week. I prefer both. I like both short-term and long-term trading. And so this news announcement would have been at 10:30 in the morning. And you can see right there, 10:30 in the morning, we weren't really basing too much. And it was a little bit wide on the zone here. Actually, it's only about 10 pips, 65 to 75. It's not all that wide. And unfortunately, we didn't get a good reaction out of this one. And what I would normally look for is putting my orders, again, around the basing that happens just before the news announcement. Just about 15 minutes before the announcement, I look for the lows and the highs. Simply put in a sell order below and a buy order above. And in this case, well, broke out to the downside after the news. If I don't get a very severe reaction on the news itself, I will generally cancel this order right away, or cancel the position right away, just exit out of it. So unfortunately, we didn't get a very good basing before the news was announced. But that's generally what I'm looking for on some of those news announcements. And what I would recommend you do is go back and see, just like I did here, I went to see on non-farm payroll, how did we trade the non-farm payroll last time? And you can go back to see when there were times of disappointment or times where it beat what was expected. And you just go into those announcements and see what is the history, and gives you a higher probability of picking the right direction, as well as, and you can trade one direction. You don't have to trade both. I'm trading both because I don't know which direction the markets are going to release, but if I have an idea based on the economy and what's been going on, I can potentially trade in the direction I think it's going to go. So once again, I go to non-farm payrolls, and I can just go to see, okay, these are released. Let's see, does it say? Nope. It should show on history. That's graphic. We can go to history table and see right there the previous releases. So I can look to see what happens when they beat the number, and I can see what happens, that's beating the number, or I can see what happens when they miss the number. Now, trend supply and demand will generally work with the news. So if we go back, for instance, to the Aussie dollar, Aussie yen, now let's go to perhaps a 5-minute chart instead of this 1 minute. A little bit larger time frame here. Not extremely large, but going back to, let's take this back to June 1st. Okay. When you go back to the 7th and take a look at what the trend was, here we are. when that news came out, and first of all, before the news came out, what trend were we in? What was our overall trend there before the news came out? Yeah, it was down, right? We see that we have some lower highs and lower lows. So you would expect the trends to continue. We can go back even further. You can see several days of downward movement there in the Aussie yen. Okay? So, why did it all of a sudden reverse? Well, it didn't reverse at the news itself, did it? What happened was it reversed before the news occurred. Notice we bottomed out here earlier in the morning, started moving up, based, and then continued the trend. As a matter of fact, after that news release, remember we had the knee-jerk reaction up, the correction back down. Those of you who didn't want to trade that knee-jerk reaction, all you had to do was wait for the correction back to this basing, catch the move, and it moved up very nicely about, 150 pips to our next fresh area of supply. Now, why would it have turned around in this area? Well, the only reason why we would have seen a trend reversal on this smaller time frame is because if we go out to a larger time frame, that would have been an area of demand. And I'm going to go back a little bit further here to find the area of demand. So we'll go back maybe 5/1/2013. Yeah, you can generally just go with the trend and anticipate the trend continuing. So there is our area where we bounced and changed trend direction before the news was released. Well, going back in history here to see the last time we were at that price level, and I may have to go back even further. I do. So we can even go, well, let's go out to a daily. See how far back I would have to go. You go back all the way to January 2013. And that's where we started bottoming out on that time frame. Okay, now we have been lower since then, but when that news came out, where's my circle there for the news? Got way too many lines now. Anyway, it was in 90.56 where that first reversal came in on that news release. There it was, June 7th, where we had that reversal. So going back to January of this year, let's do a 30-minute chart. Go back to 12/26/2012. We'll get that downloaded real quick. Won't take long. But yeah, I still like to go both ways just in case that there's a knee-jerk reaction to the downside. All I'm looking for is a knee-jerk reaction. If you're trading the overall trend, then you wait for that knee-jerk reaction, pull back to a supply or demand zone, and then join the trend at that point. It's like I was saying, if I go back to beginning of January or December of last year, there we go. I'm actually surprised there is no area of demand there. Generally, if you're going to have a trend change, it's going to occur at an area of demand, and there is no demand. That's what I was looking to see, if there was a demand zone there that would have turned the prices around on that 5-minute chart. But just before the news came out, we had been moving in an upward trend, and therefore, after we paused, we actually broke to the upside. Well, the news was also positive, but it was just simply an excuse for what was already likely to happen. So that's generally what I'm looking for when I'm trading news. Now, if I'm looking at a bigger picture where I'm not getting in on, let's go GBP, JPY. There's been a lot of talk going on around this particular currency pair, right? And I'll take this out to a daily chart, looking at our bigger pictures here. We do have news coming out this week for the pound, right? I showed you just a little while ago. We go into the economic calendar. Okay, close out this. There we go. And I believe it was on Wednesday, or no, Thursday, sorry. Here we have the interest rate decisions going on. Okay. So when I look for some of the Great British Pound information, I'm not going to necessarily do the knee-jerk reaction and trade it that way if I'm looking at longer-term investing. But what I would do is see if it accelerates my move into a supply or demand zone, that's where I would likely exit the trade. Because the faster we move into one of those zones, the more likely we are to see a reversal at that zone. Okay, so depending on where we're trading this, by the way, this looks like a head and shoulders formation coming in here on the daily pound yen. Not sure if you guys noticed that. Right there, left shoulder, head, forming kind of a weak right shoulder though. It's not very symmetrical because we're extending a little bit far to the right. But if we do get to see some of the ref on the Aussie yen is on the weekly and solid support. I'll take a look at it. But right now I'm just looking kind of at this area to see if there might be a reversal coming in on the pound. We might start to see some weakness and then strength in the yen. Now, I don't trade head and shoulders the traditional way. I don't wait for them to break through. I usually try to trade them on the right shoulder. And the confirmation I would get is if I see that on the weekly chart, this 155 area happens to be an area of supply. So even when the news comes out, if the news happens to be bearish, and we've been in a bullish trend, but this could be a trend reversal coming, because what do you see right here? Lots of selling pressure, right? This is the weekly chart of the pound yen coming into that area. Just shy of it, we're starting to already see some weakness in the markets. So I might look for an opportunity even on the daily chart to short. Well, unfortunately I don't have one right here because that selling pressure was already tested, so I can't get in there. But if the news does come out and it's bearish for the pound, obviously it would break to the downside, but I'm already expecting the markets to break towards the downside. If we get a strong movement down into this 141.34 area, okay, by the news pushing us down, I would actually exit my trade at that area for two reasons. Number one, it's strong movement to the upside, lots of buying pressure. And number two, when you have that news and people react to the news, it exhausts either the buying or selling pressure. And if you exhaust into an area of opposing pressure, like I was saying, if we have bad news that sends the pound down up against this area of demand, you likely have exhausted all of the selling pressure for people who shorted based on the head and shoulders or based on the news. And that's going to give a great buying opportunity on a pullback to that area of demand. Okay. What I meant by this selling pressure has been tested is this. This is the origin of a strong move. We tried to move up with a green candle there. There we go. Tried to move up with the green candle, but there was some significant selling pressure on this move down. It was tested right here, and it held. We pulled back. But the next time we're up there, that supply, well, it's not really a great supply zone to begin with, but that supply is not as strong because some of the sellers who would have held us down now were already having their orders executed back here. So it's not going to work quite as well. All right, so that's pretty much all I had to talk to you guys about as far as the supply and, how to trade some of the news. I do trade on a very short term. It's not for everybody. You can wait for that correction and trade the continuation of the overall move. I'm going to go ahead and take a look real quick here at the weekly. And yes, we do have this weekly prior supply, now demand, that could hold us up a little bit on the Aussie yen. It actually is. We're getting a nice little bounce here right now. Now, if you've watched some of my other webinars, some of the things I would look for in these in this particular trading would be RSI to see how strong that trend is right now. Yeah, we dipped below 40 on the RSI, which is signaling bearish pressure. Would I trade the news down in the demand zone and then take the long trade? Yeah, absolutely. Yeah, I would definitely do that. So right here, that's my area of demand. On the weekly chart, we are bouncing from that area, but we are unlikely to take out these prior highs. On the Aussie yen, if we get any sort of a summer rally going on here, remember this follows the S&P 500, we're not likely to get above 100 because it's going to be a very weak rally. As a matter of fact, it'll probably just be a retracement before continuation of the trend. So if you're looking at this move back up, oh, heck, I wouldn't even start the Fibonacci's there. I'm going to start it from where the real bearish pressure began, right there. And I would say we're probably only going to be getting up into, 93.90? And we could possibly look for some sort of daily supply in the early June week to find where this is likely to stall out. So from taking that weekly down to the daily, it doesn't look like we have, oh yeah, we do, right there. 97 at the 61.8% retracement. That's the origin of the last thrust to the downside. That's where I would see this going to. Okay. All right. Are there any other questions? Anything I went over here? I'll be with you guys again in a couple of weeks just doing kind of a general market overview, looking for trading opportunities. Would I consider 96.58 an area of supply? 96.58. Well, the area of supply I would mark off. Oh, it's on a 4-hour chart. Yeah, on this particular time frame, I'd be using these spacing candles that we had here, and probably that. Yeah, actually, this right here, and that's the start of the move down. So if I get my labels in there. 96.48, 97.34, that's what I would look for. And if I were looking at a 240, oops. Yeah, you might be able to fine-tune it a little bit more right here. You can see that's an area of basing before the beginning of a collapse. Friday, will I only be trading Aussie yen? Actually, I won't even be trading Aussie yen. What I'll be trading is the ES. Because I tend to do a lot of futures on some of the news releases. So I'll probably just do the S&P futures themselves. But if I was using it for currencies, or trading currencies, yes, I probably would be doing the Aussie yen only on that particular day for that news release. Now, would I trade it only for the entire day? No, probably not. I look for trading opportunities on many different securities. You know, when I go into, I'll show you here before I leave, my extended learning track program that we teach online at Online Trading Academy. It's our graduate program. We have these prep slides that we prepare before every class. And this is what our prep slides look like. I'm going to share it with you. You know, what I do is I talk about the news that's coming up. I find supply and demand zones. This is what I did yesterday. Am I an impatient trader? No, I wait for my plans to follow through. And then I trade my plans. So we identified these, and I identified them early Sunday morning, went over them with the class, went over some of the trades we were looking at, euro pound, dollar, euro yen, and so on. And then we look to see when they come into our opportunities, when they come into the entry area, I get into those trades. So no, I wouldn't say I'm an impatient trader. What I do is I simply wait for my opportunities after planning them, and either they happen or they don't. Today, on my equities class that I was teaching this morning, I was trying to trade live with my students. I couldn't find any high-quality opportunities, so I took no trades. And that's actually one of the better things I could show them, to have that patience to wait for the right opportunities. Okay. Yeah, we were looking at the euro pound on a 60-minute chart. And that was yesterday. So we were looking for a long at 85.16. Never got into our area for demand. You can see the reason why I was looking at that. Oh, do I like fast trading? Yeah, I like trading on smaller time frame charts generally. This is that area that I was looking at right there. We haven't pulled back to that area yet. But on a 60-minute chart, I may not be able to get into the trade for several days, and it may last several days for the trade. So it really just varies on whatever the market's telling me. That's all. So anyway, I have to get going, guys. Hopefully you enjoy the rest of your week and have some great trading out there. Wish you all the best in your trading. I don't say the best of luck because it is a skill that you learn. And hopefully see you again soon in a future webinar. So until next time, trade safe and trade well.